Hello and welcome back to the Sovereign Effects YouTube channel. So, you're tired of getting faked out and losing a bulk of your trades because you're expecting price to move in a certain direction after closing outside a range. Okay, so in this video I'm going to talk about how to spot fakeouts and how to trade them, and the best way that I have found you could actually avoid fakeouts. So, without further ado, let's dive right into it. As you can see, one might have their range here, and that's just me. According to how I trade in ranges. Price has to exist within a range. So a range is basically the support and the resistance, the supply and the demand. In between we have a range. So the other range here is where we have another range. Okay, so what is a fake out? So this is what actually a fake out is. So after a breakout, you're expecting maybe price to push to the next zone, break, and maybe go on and on as you milk the trade. So this is a very profitable setup, the breakout strategy. But with due time you'll realize that you're losing a lot of trades to fake outs, and you can't actually, because before this video I know most of you can't, it's near impossible to spot fake outs and to anticipate fake outs. So this is how I anticipate fake outs. So in this scenario, what I'd have done, I usually, before I enter trade, I usually label my ranges so that I can know where to execute on. And also note that I only execute on ranges that have enough pip value. For instance, I only take trades within ranges that are above 30 pips. Anything below that, I feel like it's gambling. So here we have our range 2. Okay, so what I'd have done in this situation, I'd have waited for a close above range 1 and also a breakout above range 2 to satisfy the following pattern. So a breakout, price does what it does best, ups and downs, but once it breaks above this is when I'll actually execute on my long position, have my stops somewhere within the range as I anticipate price to fill this range for around 50 pips. This is a tradable range. This range is 58 pips. You can't expect to always catch the whole move, but a piece of 50 pips is, say, 30 pips, 35, 40 pips. I think that's enough pips for a trade. So that's exactly how you can avoid fake outs. So this was the buy scenario. Let me see if I can do a sell scenario. Okay, so we have a small scenario. I'm not sure if it's the best, but let's just use it. Okay, so here we had formed a support. Here we had formed a resistance around here. So as price broke below this, what did you expect? You expected shorting opportunities as you head towards the next range, but that was not the case. Price went and closed back into the range. So this is where range 2 saves the day. So price closed just below range 1, then it rejected, in fact it rejected range 2, and this is where I'd have executed, because price closed back into the range. And as we've talked about previously, this is a video on trading fakeouts. So once you realize price closes back into the range. This means it failed to push down, and now you can expect a push up to touch the top of the range. So this would have been my trade, beautifully executed with stop losses below the current 30-minute candle. So that's it in the sell positions. Also, you can also get faked out in the range too, and those are probabilities. You can't expect to win 100% of your trades. In trading, the first mental barrier is accepting that everything's a probability. This is calculated gambling, and you might have your analysis to the T, but price just does what it wants. You don't know what price. The best thing to do is to repeat the same process over and over and over, and no need to fix what's broken. Okay, with that short video, let's meet in the next. If you have any questions, leave it in the comment section below. You can contact me through Instagram or through Telegram. Also, don't forget to join the free group for analysis and more content like this. So see you next time. 7FX out.